What if I told you guys that you could retire with just 4 Bitcoin by the year of 2030? Well, today we're going to be breaking down the new model that not only predicts that, but we're also going to be using this brand new model to have a look at how much Bitcoin you need to retire if you've got, say, 5 years or 10 years left working. And we're also going to be having a look at when we can retire if you hold 1 Bitcoin, 10% of a Bitcoin, or even 1% of a Bitcoin, because we do know that 4 Bitcoin is a lot. We do know right now that's nearly $500,000, considering the price of Bitcoin's above $100,000 a coin. So, of course, we thought the best person to discuss this brand new model with would actually be the creator himself. So we've reached out to Smitty, and of course, we've got our fearless host and fearless leader, Nico, to dive into what I think is the most interesting model in the Bitcoin space right now. But before we really break this down in detail, we have a lot of institutional news that I think impacts this model and I think adds even more credibility and credence to the crazy bullish numbers we're going to be looking at in the culture section of today's show. So this brand new report dropped from Bitwise, I believe. And the first point I want to discuss with you today, guys, is this massive highlight that Bitwise is saying. They're saying that we could see over $120 billion of institutional flows to come into Bitcoin before the end of 2025. So this could total and mean that 4.2 million Bitcoin is going to be acquired just by the institutions. Nico, what do you think of this?
Yeah, I mean, it's absolutely crazy. And it's a trend that we've been seeing in 2025 and 2024, right? Ever since, specifically with the Trump administration coming in and the approval of the ETFs in early 2024, it's just been an institutional bonanza. I mean, this is the first time in Bitcoin's history where it made an all-time high before the halving, right? And that was all due to the ETF inflows. So I think what you're showing there is a Bitwise report, once again indicating, that we're basically set up for one of the most bullish Bitcoin runs. And I've been saying this for months now, guys. You guys are hearing a broken record. I'm going to say it once again. This has been the most bullish Bitcoin cycle from a news perspective, one of the most bearish from a price action perspective. But I think the price action is going to catch up very, very soon, momentarily. The seas have parted from a regulatory perspective. Bitcoin has nowhere else to go but up. I think it's just a matter of when.
I couldn't agree more. I think the institutional flows we're seeing in the Bitcoin space in 2025 is absolutely unprecedented. I think I've been in Bitcoin 7 or 8 years and I've never been as bullish for a bull run than I am right now. I think you've been in Bitcoin even longer, Nico. How does this bull run feel compared to other ones?
Yeah, I mean, like it feels a little bit muted, honestly. I think we're a little bit spoiled. Like I got into Bitcoin in 2016, and I never forget the 2017 run. We got a 20x in a year. Now, what's interesting about this cycle is that it gives me 2017 vibes. This doesn't give me 2021 vibes. 2021 vibes, it was like it peaked very early on, but this cycle, it seems like it's going slow and steady. Right? It's going slow and up and to the right. And the longer we essentially consolidate at these levels, the better it is actually long-term for the bull run. So it's just, obviously it's a little bit psychological. It's a little bit tough on you emotionally, especially if you're a Bitcoiner who's been in this for a while and you're used to the, 6x in a year type of gains or 20x in a year. I think this one has been the most painful from a psychological perspective. But I think if you hold on, you're going to be absolutely rewarded, man. I'm incredibly bullish. Luke, could you pull up that article again for just a second? Let's read some of these numbers because they're effing crazy, man. I mean, $120 billion in institutional flow forecasted by the end of 2025, with that figure rising to $300 billion in 2026, totaling over 4.2 million BTC in cumulative acquisitions. Now, what's really interesting about this, Luke, and I know you have your finger on the pulse of this, there's not enough Bitcoin on exchanges to essentially fulfill this. fulfill that number. There's not. There's not enough Bitcoin on exchanges. If they wanted to buy all that Bitcoin, there's literally not enough, right? Most of the Bitcoin, a lot of it's estimated between 3 and 4 million are completely lost, and then the rest are in custody, right? So it's only between 3 and 5 million that are actively traded. I think it's a little bit less than that. The amount of Bitcoin on exchanges continues to hit all-time lows. So what do you think is going to happen to the price? It's not that they're not going to be able to acquire that much Bitcoin. They're just going to be able to, they're going to be forced to be able to buy it on a much higher price. There's always going to be a seller. But the question is, what's the price going to be at, right?
Absolutely. And this is why I'm so bullish to discuss this brand new Bitcoin retirement model that Smitty's put together, which I'm pumped to get into today, because I think the biggest thing that people are not quite being able to wrap their heads around is just how scarce Bitcoin is. Like you said, Nico, coins on exchanges right now, it's dropping like an absolute rock. We can see over the past 5 months alone, the number of Bitcoin on exchanges has dropped from 2.9 million in November 2024. So that's just 5 or 6 months ago. It's not that long ago. Right now, you can see it plunging to 2.5 million coins. So we've seen about 500,000 Bitcoin leave the exchanges in the past, 6 months. So what does that mean? Let's break it down. We know that about, 15,000 Bitcoin are mined a month. There's 450 Bitcoin a day. Quick math tells me that's about 13 or 14,000 Bitcoin mined a month. Well, over the past 6 months, we're seeing 80,000 Bitcoin leave the exchanges with only 14,000 mined. This is why I think, even more bullish than most people in Bitcoin, because I just think we're going to see this thing progress. We're going to see this 5-year trend of Bitcoin leaving the exchanges. And I think we're going to get into a world where not a whole lot of the Bitcoin actually circulates and is available for sale. Now, again, I've run my own numbers assuming what would happen on a Bitcoin standard if we see a Pareto's principle distribution on Bitcoin. And you can run your own assumptions, but I've found through my maths that if there is 4 million Bitcoin available for sale and actively trades every day in the future on a Bitcoin standard, you don't need that much Bitcoin to retire. You can get into the new class of millionaires with 0.015 Bitcoin. A lot of people throw that number around, but they don't back it up with the maths. The maths is on a Bitcoin standard. Again, what is a Pareto's principle? It's an 80-20. So typically in the world, wealth distribution, it follows a Pareto's principle. It follows this 80-20 distribution where the 20% of the richest people, they actually have 80% of the wealth. And this Pareto's principle, it's not just for, it's not just found in economics and wealth distributions, but it's found in many things. So if you assume, okay, we transition to a Bitcoin standard. Let's assume there's a Pareto's principle wealth distribution on a Bitcoin standard. And when you run those numbers, there's only going to be 80 million other people who can hold 0.015 Bitcoin. Today, that's 1.5% of a Bitcoin, and that's about $1,500 worth of Bitcoin. And again, how many millionaires are there in the world? There's about 50 million millionaires, and there's only going to be 80 million people who can hold that amount of a Bitcoin. So again, that's a completely different model, completely different calculation to the one we're going to be talking about today with Smitty. But this just goes to the point that we're talking about. Bitcoin is incredibly scarce. When you consider how quickly Bitcoin is leaving the exchanges, I think this is the biggest thing that a lot of these big institutions like Bitwise is looking at when they're publishing these massive reports that I think it's worth getting into in a little bit more detail. Nico, have a look at this second bullet point. Bitcoin treasury companies are on pace to accumulate over 1 million Bitcoin, with the number of public companies holding Bitcoin expected to more than double by the end of 2026. What do you think of that?
Yeah, no, it's absolutely crazy. And just to kind of add a little bit of context to what you're saying, right, in regards to the amount of millionaires, right? So you're absolutely right. It's between 50 to 60 million millionaires all around the world. And there's only 21 million Bitcoins. So do the math, right? There's literally not enough to go around. And then subtract the 3 or 4 million that are lost, right? This is absolute scarcity. Gold doesn't have this. The price of gold goes up. Gold mining goes up with it. The essentially the halving ensures that it doesn't matter how high the price of Bitcoin goes up. The amount of Bitcoin that's being mined is literally going to get cut in half every 4 years, no matter what. So you have, you essentially have absolute scarcity. It's going to rocket ship up. Anyways, I'm going to pull up what Luke was talking about. The second paragraph, or the second key highlight from this awesome report, this Bitwise report. Shout out Opti for finding it. Opti will be back on Monday. Guys, next week's going to be absolutely awesome. By the way, we will be live streaming from the floor of the Bitcoin conference. It's going to be absolutely awesome. Hope to see a lot of you guys there. Anyways, Bitcoin treasury companies are on pace to accumulate over 1 million BTC, with the number of public companies holding Bitcoin expected to more than double by the end of 2026. Again, it's what Luke was talking about with the amount of millionaires. There's only so much Bitcoin for these public companies, right? I think there's a little bit of a rehypothecation risk that a lot of us fear a little bit. Ideally, you'd want these companies to do what El Salvador is doing. El Salvador has their reserve completely public. Anyone could audit that address at any time. Ideally, that's what you would want a lot of these companies to do. I think it would solve the rehypothecation problem. I think eventually we'll get there. But regardless, I mean, even if there's a percentage of paper Bitcoin, there's still 21 million Bitcoin. There's only so much to go around. And if these companies have the intent of trying to acquire 4.2 million Bitcoin, I mean, the price is going to go up. It's inevitable. Anyways, we got Smitty on the show today. I want to get his input into all this. Smitty, while you're creating this retirement guide, I think a lot of people were seeing this, and I think the reason that your post, which we're going to cover during the culture segment later on today's show, stay tuned. We're going to do a deep dive. I think a lot of people, when they saw it, I think the reason it got so popular, it resonated with so many people, is it's actually not that much Bitcoin that you need to retire. It's actually significantly less than a lot of people anticipated. And I think you put the number all the way up to $1 million per year, for the big ballers that want to live large. But I think you started with like 50K per year, in most of the world, unless you're living in like, LA, New York, Miami, or like one of the big cities, you're not spending, good luck trying to spend, more than $1 million. It's absurd. You're going to buy the whole town essentially, right? So, but I love how you broke it down. And one of the things that I love about your retirement guide as well is you started from age 5, which I appreciate because I just had my first kid, right? And then
congratulations.
Thank you. And then you essentially speculated that people are going to live to like age 100, right? And then the retirement was going to be like 75, right? And I love how you broke it down. So anyways, do you have any thoughts on this Bitwise report and the supply shock that I think we're on the verge of seeing? I mean, they're basically saying they all these institutions have and this isn't even taking into account the US government. Donald Trump's literally going on TV and basically saying the US government wants to buy Bitcoin. Like, holy cow, right? Number eventually is going to go up. Smitty, do you have any thoughts?
Definitely. I think this is an important report. I think this is an angle of Bitcoin analysis I don't tend to spend as much time on, but I understand that there are serious supply shock considerations that I think are part of what drives us into these massive upside bubbles that we see, periodically. And when the hype around Bitcoin starts to occur, and I think that there's basically these hype cycles. I think it's a totally in my understanding, it's a totally valid driver of what gets us into these exponential run-ups. And so I think that's what we're going to start seeing here. I like how you brought in the angle of we're depleting on the exchanges at a faster rate than people will be able to actually be able to draw off of. And I think that's just compounding with the other effects. So the numbers are massive, and so from my perspective, it's as you guys probably know, I analyze things from a power law perspective. I started doing that a couple of years ago on my own. There's a couple phases without getting into the deeper details. I look at kind of 2 general phases of Bitcoin. I see a long-term growth trajectory that's driven by a certain set of math principles. And there are these massive run-up cycle. I mean, it's fairly cyclical. I think most of us would agree. And a huge amount of the gains, huge amount of the returns that a lot of the traders, especially around this asset experience, are around times like these. So it's incredibly exciting. I'm nothing but bullish about that. Those are numbers that I haven't spent as much crunching on my side. I tend to take the longer term quantitative analysis approach, but very, very exciting. I'm certainly excited to see my bag explode. And also I love the figure of that there's not enough millionaires in the world, or there's not enough Bitcoin for all the millionaires in the world to own one Bitcoin. That type of figure, I think, should speak to the scarcity of this asset, which I think is one of the key value propositions of it. So.
Yeah, 100%. I agree with you. Now, the power law angle is really interesting. I do want to address some of the comments. By the way, guys, I do want to give a shout out to the live stream. 1,500 of you guys watching live between YouTube and X. Rumble is absolutely popping off as well. If you guys are enjoying the show so far, make sure to smash that like button. I do want to address the comments before we move on. Luke just got off a flight. All right. So he's tired. Opti is not fired. Opti will be back on Monday. Opti needs a well-needed rest. He's been going hard and filling in for me for the days that I've been out. But yeah, I mean, we're getting ready for Vegas next week. We will be live streaming from the conference floor and from the Airbnb. So it's going to be absolutely crazy. You guys are going to love the shows. Anyways, Luke, I saw you pull up something really, really interesting. Why don't you talk about that?
Yeah, so this right here, it's not the devil's lettuce that I have before I get on these shows. This right here is the number of millionaires versus the number of Bitcoin. So we can see here we got about 60 million millionaires. Yes, the number fluctuates. There's 22 million millionaires in the US, apparently. That's a really interesting statistic. First time I've seen that one. But again, 21 million Bitcoin, 22 million millionaires in the US. I thought that was really fascinating. And as soon as you said that, Smitty, I knew I wanted to find a chart to back that up, because that's it's a very interesting point about Bitcoin scarcity.
Awesome. Yep.
Yeah, I think a lot of people, they struggle. I think a lot of people need visual aids. And I think, charts like this show that, yes, Bitcoin is as scarce as we are saying it is. So great point there, Smitty. I love that one.
Yeah, absolutely. I mean, it breaks it down. I love it, right? Where it says 59 million millionaires, just in the US alone, 22 million millionaires, and circulating supply of Bitcoin 19.65. Take into account the 3 to 4 million that are estimated lost. I mean, you could do the math. Just in the US, if every millionaire in the US just wanted to buy one Bitcoin, they physically couldn't. And I think that gives you a very, very good, kind of perspective. Anyways, I kind of want to double back to what you were saying about regarding the power law. So the power laws became extremely popular. YouTube, me and Luke know this because we make YouTube videos. And it's just taken essentially YouTube by storm in terms of people's interest in it. And I think the reason for that is people buy Bitcoin and they want to have a sense of where Bitcoin is going. And I think, Plan B's model, absolute catastrophe, didn't work out. Shout out to the guy, though. Great content creator. Big fan of his work. But it's really interesting is this seems to be accurate so far. The power law model seems to be accurate. Now, why are you such a big fan of it, Smitty? I know that I was talking to Cena the other day. He did like an evolution of the power law models, like the quantile model. So it's even deeper than the power law. But what is it about the power law model that gives you so much confidence that essentially it allows you to predict where Bitcoin is heading in the future? I mean, isn't that impossible? Like, if we knew where Bitcoin was heading in the future, wouldn't the price be a lot higher by now?
Great questions. First of all, huge shout out to Cena, Plan C, handful of other people. Some of them are great online colleagues in terms of doing the analysis. And at this point, I consider friends. Cena's incredible. I mean, he's a workhorse as well. What gives me confidence about the power law is not necessarily that I think long term it's the end all be all for what the action is going to look like, but I think it's the best that we have from what I call the reliability perspective. So when you take the statistical model in the probabilistic view of what the price action is doing long term, so thinking, and this is why I think it's so attractive for those who are of the hodler mindset, right? So we're not trying to trade the cycles necessarily, but I think when you look at the long-term reliability of the asset, and kind of my background in engineering has been a lot of reliability work, we look at like, so what are the most likely outcomes based on historical data, right? And where the data sits. And one sort of variant on the power law. First of all, the power law is a very simple model, which is it's a simple, elegant model. So in physics, modeling, statistics, you look for the simplest type of model that can explain the most amount of the data that's occurred so far. And here we've got 15 plus years of data. It's an amazing data set. The tricky part is there's only one BTC, there's only one Bitcoin. So it's not like we have several sister assets to compare it to directly. At least there's only one king. But then the quantile analysis is actually taking the power law the power law formula and then breaking the data up into different percentages, basically. So it's like this amount of data occurs 1% of the time on the low end. Then you can go up to the median, which would be that. I think what's showing here is that somewhere around that green line would be like the median, or so 50% of the time the price action follows that trend. And it's a power law formula. You can do that all the way to the top. Now, one caveat is I do a couple things on my channel or on my account. I do power law analysis, and I've developed my own variant of it called the decay channel, which attempts to more reliably capture the where the bubbles are going to go. So as we continue to have more cycles, what is the upper bound projected to be? And then there is the retirement guide. The retirement guide actually doesn't use that because, and we can get into this later, I made a conservative version of this retirement guide that's based on the 5th percentile power law. So if you have that other chart, it's a line that's following closer to that support. It almost looks like the support line. That's a great chart from Cena. So I don't know if he's showing the Q1 here. So imagine like a Q5. A Q5 would be the basis mathematically of the retirement guide, along with a lot of other stuff. And the reason I do that is because I'm trying to take the guesswork out of where the bubbles are going to take us periodically. And so that's why I'm calling it a conservative target guide. So it's like somebody that's entering into Bitcoin and they're wondering, well, like, how much should I accumulate to start? I think it's giving a pretty reasonable initial target for people to stock up as a minimum target that will follow that 5th percentile power law trend line, and that will theoretically allow them to not need to down adjust their annual living expenses from year to year 95% of the time because of the statistics around it. So that was the reason for the update to. So right, what you're showing now is the old version, which is the median power law, but that is the median price, which is a combination of sort of that support line as well as where the price takes us up each of these bubbles. So it's a little scarier in terms of the volatility. And so the reason behind moving to the 5th percentile is to make it a little more conservative and make it so you can be confident that 95% of the time, any given year, you're not going to have to go, oh crap. So this year I can't draw down 100,000 or the future equivalent of 100,000 a year. $100,000 a year. This year, I'm going to have to like really tighten my belt, or sell off some assets, or do something crazy.
I love that, man. So, and we're going to do it. By the way, guys, we're going to do like a deep dive on this. You guys are going to have to stay tuned for the culture segment. We're going to do a deep dive on how much Bitcoin you need to retire. We're going to break it down by income brackets. So 50, 100K, 200K, 250K, $500,000, $1 million, and we're going to plug in the numbers. It's by age as well. And of course, we have the author of this joining us. But before we move on to that topic, Luke, could you go back to the kind of the rainbow power law chart that you had pulled up? I do want to ask Smitty about it, and I do want to give credit. I actually had Cena on Simply Bitcoin IRL. We were talking about this. Now, okay, my question to you is, right? So right now, for the audio listeners, because we do have a lot of podcast listeners. Essentially, we're looking at this, and there's different quantiles, right? There's the very bottom one, which I believe means the lowest risk. Then there's what you call the transition, which is like the second to lowest risk. Then there's the acceleration. It becomes yellow after that, which is roughly at 107K. So we're in that territory right now at the moment. And then risk starts to become the 130K region. and then you say danger is in the 163K to 229K. Now, keep in mind, everybody who's watching and listening, this does move as time goes by. So by 2026, that danger area doesn't start till 204K, and that risk area doesn't start till 160K by 2026. So 2026 is like 6 months away, basically. So it does move up as time goes by. So could you give us your opinion on this? So we are in the acceleration phase, so to speak.
Yeah, absolutely. Again, this is a great way that Sina's put this together, visualized it. Some of us, I mean, we've been doing quantile analysis for quite a long time. And I think this is one of the best ways that the purely quantile power law perspective has been visualized so far. So big kudos to Sina. I think where we're at today, this looks like it's probably a few months outdated. This might be like from January or something, if I'm reading it correctly. My opinion on this is that there are a couple different ways. So I am most confident in, see on the very far right, it shows the Q66, Q33, all the different quantiles. If you look all the way to the right, and that's what's indicating which quantile level you're looking at for the entire trajectory in that segment. Personally, when I look at the statistics from a quantile power law perspective, I'm most confident in the values below the 50th percentile and probably even the 30th percentile in terms of where I'm confident the price is going to be living for those percentiles. The tricky part about using quantile analysis, just in my opinion, I think it's a totally legitimate way to analyze the data. As you start to go to the tops, right, and you can just look at like 2025, we're currently in 2025, you start going to the 90th percentile, which is, I don't know if it says 163K, I don't know if that's for January, and then 230K for 99th percentile. To me, it looks like beginning of 2026, end of 2025, it's saying like 280K. This is just my opinion, okay? But when I analyze using the decay channel model, which is kind of my variant on the power law, as I go up to the higher percentiles, I shift away from using a pure power law model to it's a combined multiplicative model between a power law and an exponential decay model. And the reason for that is that when I started analyzing the data above the 50th percentile of the data, especially the 90th percentile and above, to me, it doesn't fit a power law that well, actually. And what it does look like it fits pretty well is an exponential decay function overlaid onto a power law, which is a different thing than a pure power law. So I'm a little less,
dude.
I guess you would say a little less bullish at the tops.
I'm gonna interject a little bit. First
yeah,
of all,
go ahead, please.
What the F does that mean, bro? Like so, a decaying, like, I know what that means because I'm a nerd and I live on X and I talk to Sina. But for most people, when you're saying a decaying power law, what does that mean in just simplistic terms? Okay, and also, guys, hold on, and let me interject here for just a second. Also, I'm usually the one that gets picked on today. Leave my boy alone, all right? Luke got off a flight. He's one of the hardest working content creators, all right? He's incredibly talented, and you guys got to stop it. Anyway, smash the like button if you guys are enjoying the show. Right now, we're at 128 likes. Help us break 150 likes by the time we get to the 45-minute mark. So smash that like button. 700 live viewers on YouTube alone. Back to you, Smitty. What does if you could pull that up, Luke, I'd appreciate it. What does that mean? A decaying power law. What does that mean?
Okay, so a power law is a specific formula, right? And it's got two key variables in it. And one of those variables is the actual exponent, which is basically think of it as the growth rate of the power law, right? So in this purely quantile analysis, every single one of these lines, the purple line, every single one of these bands, it's using the same exact formula from bottom all the way to the top. So that means even for the data that's just being captured by the bubbles, so the bubble back in 2021 is here showing early on. It's modeling all that as a power law. So what my model does is a little bit different. Again, I have mad respect for this, and I've looked at it through this lens as well. And it may prove to be more valid than mine. I don't we'll see. The main difference with mine is that as I go to the top quantiles, right, the highest percentages of the data, I combine a power law, right? Think of like so the basic power law multiplied by an exponential decay. So
what is an exponential decay?
So an exponential decay is instead of the variable being the exponent, the variable is the base coefficient, and the variable is actually time. So the power, it's probably easier to visualize this somehow, but you basically flip the base number and the exponent. So you reverse the two. So in the exponent, there's time. Yeah, go ahead.
So it basically what you're saying is that it essentially it decays over time. It goes down over time. Bitcoin's growth, Bitcoin's it's not an exponential curve going up. It actually starts to slow down. That's what you're saying.
The price doesn't decay down to zero. What it does is it decays down into
percentage gains.
The top data decays down into one of the lower percentile power laws. So it doesn't decay to zero. It decays down. Think of it as the volatility is minimizing over time.
Yeah, and we're seeing that. We're experiencing
that trend is exponential. So that's what I incorporate into my model.
Gotcha.
Yep.
All right. Well, yep. I'm excited, Luke. I know you want to dive deep a little bit into this before we move on to the number segment.
Quickly. Yeah, I mean, speaking of models, I mean, we did promise the people that we'd be talking about 4 different simulations today. So I want to have a look at, obviously, the number everybody's been talking about on Twitter is this 4 Bitcoin by 2030 number. But then I also want to, at the end of today's show, make it a little bit more applicable to everyone, Nico. We want to talk about, hey, when can you retire if you own 1 Bitcoin or even 10% of a Bitcoin? So 0.1 Bitcoin. And maybe we get stupidly bullish and we have a look at what the numbers say for 1% of a Bitcoin, so 0.01 Bitcoin. But yeah, I mean, let's quickly introduce the model, and then we'll dive super deep into it at the end of today's show in the culture. Smitty, what led you to creating this model? And let's talk about the big number everybody's been talking about on Twitter, this 4 Bitcoin by 2030. Where does that come into things?
There we go. There's my mic. Yeah, awesome. Thanks again for having me on to explain it. The main driver behind me putting the model together in this format specifically is that, first of all, I was to some extent inspired. There are a number of sort of Bitcoin retirement calculator tools out there that are interactive. There are a lot of variables you can play with. There's different Kaggle models, other assumptions you can build in. What I wanted to do is I wanted to do an exercise that was actually inspired a lot by my personal life and a lot of the people that I sort of try to evangelize to, that I care about, that are all different ages. They're relatively new to trying to understand their asset, but they've become interested enough to where they're like, okay, well, like, what should I get to initially? And so what I tried to do was I tried to take like a handful of very basic but very clear assumptions where I'm like, okay, these are assumptions. And then a couple of key variables that I think for the average person are going to be the most important variables to turn. And of course, there's going to be more when you start to get more advanced and you want to make more detailed changes. You can do that. But this is supposed to be something you can basically lay out on a single page, or even include in a small booklet, or you can print it out, put it on a poster on your bulletin board, just so you can kind of like very easily refer back to and say, hey, how am I tracking against my stacking goal? And where is that going to take me in the future? And so that was the inspiration for it, is actually coming from a lot of just the interactions I have in my personal life. Just what would be easy. I could hand somebody a 1-page kind of guide, rather than say, here's a calculator, figure it out, which I think are also very valuable. So that's to answer your first question. And I think your second question was, where are we getting the 4 Bitcoin by 2030?
Exactly. Yeah.
So it happens to be that for a roughly 4 Bitcoin by 2030 applies to several different ages because of the growth rate that we're currently experiencing. Bitcoin is the median CAGR of Bitcoin right now is somewhere between 40 and 45% annually. So between now and between 2025 and 2030, sort of a rough approximation for what most people need is somewhere around 10 Bitcoin. That's going to drop by a little more than half over the next 5 years, purely because of Bitcoin's power law growth trajectory. So that's where it just so happens that, around, and it's not exactly for, if you look at the different ages, of course, but the spread there is much smaller than if you look further down the timeline. So basically it's a function of, what most people will need starting in 2030 to continue to draw down at, and I can't remember if this applies for every single, annual withdrawal rate. I know that I've been looking at 100K most recently. So, but yeah, for that withdrawal rate, for example, that's what's going to take people to theoretically live on their Bitcoin pretty much with 95% reliability until they live to about age 100. So that's where that 4 value comes from for, I think it's for 100,000 a year.
That's incredibly bullish, man. And again,
I agree.
think it's a lot less than what people anticipated. And especially, especially for your kids, guys, or, if you're still in your late teens or early 20s, like, if you start now, we're going to run through a lot of this stuff. You need a lot less Bitcoin than you think, but I think the time is running out, though. I think you have a small window of the next. I mean, I've been saying this for like 5 years now, but it was a lot easier 5 years ago. But you still got time. But you definitely want to start stacking now. You don't want to wait 5 years from now. Like, the U.S. government basically announcing to the world that it has every intention of buying Bitcoin. This public company Bitcoin strategy thing is just getting started, by the way. I think it's going to completely change capital markets. But strategy success is sending shockwaves. And it outperformed NVIDIA, right? Even with the AI boom, strategy still outperformed NVIDIA. I mean, to be fair, it came from a much smaller market cap, but still, that's still incredibly impressive. Again, the regulatory clarity with the Genius Act passing Congress, passing the Senate, got the 60 votes that it needed. So yeah, I mean, everything is looking really bright. It's probably a good idea to get some just in case this catches on. Anyways, guys, before we move on to the next segment, I do want to give a shout out to Simply Bitcoin's lead sponsor. Guys, you guys know the deal. Simply Bitcoin is powered by our partners. If it wasn't for our partners, we wouldn't be on air. I get this question all the time. How do I support the show? Well, number one thing you could do is check out our partners. And we are very picky on who we choose to partner with. Check out bitcoinwell.com, best place to build your automatic self-custody Bitcoin stack. Start your financial independence today. Go to bitcoinwell.com/simply. Put in your email address. It takes 2 to 5 minutes to get signed up. Bada bing, bada boom, you're ready to buy Bitcoin. What makes Bitcoin Well unique? What makes it special? Why we recommend it here at Simply Bitcoin is as an automatic self-custody Bitcoin on-ramp. What does that mean? It means that every time you buy Bitcoin on Bitcoin Well, as soon as the funds clear, it goes straight to your self-custody Bitcoin wallet address. Also, when you buy Bitcoin on Bitcoin Well, you earn something called Bitcoin Well points. And you could use those points towards a bunch of different prizes, like a stamp seed plate, or a leather mint wallet, or an orange Cybertruck, or a Simply Bitcoin hoodie, or a BitX. All this stuff. Or you can play the Bitcoin Wishing Well contest, which we're going to be doing live on air for you guys. Toss a coin into the wishing well. Get your Lightning wallets ready. First person to scan the QR code has won 352 sats. By the way, every time you toss a coin into the wishing well, you have an opportunity to win up to 1 million sats. You win every single time regardless. And if you go to bitcoinwell.com/simply today, you get 3 tosses into the wishing well, absolutely free. Every single toss, you have an opportunity to win up to 1 million Satoshis. All right, everybody, we will be right back. We're going to hit the numbers segment. Let's check it out.
I want to tell you guys about our sponsor, Stamp Seed. Is your Bitcoin in cold storage really secure? Are your seed words really secure? Stamp Seed's Do-It-Yourself Kit has everything you'll need to hammer your seed words into commercial-grade titanium plates instead of writing them down on paper. Don't do that. Paper sucks. You want to literally stamp your seed into this plate of titanium. Your words are actually stamped into the metal plate with this hammer. So once your words are in, they aren't going anywhere. No risk of the plate breaking apart and your pieces falling everywhere. Titanium stamp seeds will survive nearly triple the heat produced by a house fire. They are also crush-proof, waterproof, non-corrosive, and most importantly, because this is generational wealth, time-proof. All things that paper is not, allowing you to hodl your Bitcoin for the long haul. I mean, here is the plate that they crushed. They put in water, they put a blowtorch to it, and as you can see, the words have survived. Stamp your seed on StampSeed. And you can use promo code SIMPLY to get 15% off anything on their store. Head over to stampseed.com today.
All right, everybody, scan the QR code on your screen right now. It'll take you directly to the stampseed.com website. You can use promo code SIMPLY, get 15% off anything on the store. At the time of recording, the Bitcoin price is $109,820. Block height 898,033. Sats per dollar still under 1,000, 911. Market cap 2.18 trillion. Bitcoin versus gold market cap 9.24%. Percentage issued 94.61%. Decline from all-time high -2%. Realized monetary inflation 0.84%. Anyways, I talk a lot about this subject. I want to continue talking about this subject. The Overton window. We have to continue shifting the Overton window to the right, to the correct side. To the side of less central banking and more Bitcoin, right? I always say Bitcoin or slavery. And those are the two choices that we have in front of us as a society, as the world. You either go in the side of Bitcoin, freedom, peace, prosperity, opportunity, or you go in the side of the future of fiat, which are central bank digital currencies, which is, I think, another form of slavery. So our job as Bitcoiners, as content creators, is to move that Overton window. We've done an incredible job at doing this. We did get a pro-Bitcoin president in the White House, but that isn't enough. The next evolution of this is to get a anti-central bank president in the White House. Some of the most recent interviews that I've been doing with senators and congressmen and congresswomen, I've been asking them. I said, I don't say it, but I say it in a nice way. I say, do you like central banking? Do you think central banking was a success? And those have been very interesting conversations. So we got to continue doing that. I have a clip from Tucker Carlson, and he's even noticing as well. Again, Tucker's one of the most watched not Bitcoin, but one of the most watched content creators on the face of the planet. I have a clip for you guys, and then we'll talk about it.
And so I've often thought if I were to retire, maybe I would start a political movement, a new party in the country where the whole purpose is to bring the banks to their knees and shut them down, or just you encourage everyone who's deep in debt to stop payment. How about 100 million people stop paying their car loans, their mortgages, and their credit cards? In the same way that Donald Trump once said, if you take a big enough loan from the bank,
it's their problem.
It's their problem. You're kind of in charge of the bank at that point. I would think it'd be kind of cool to do a crush the banks political party where you just all of a sudden everyone stops payment at once. And then, then you sit down with Jamie Dimon and renegotiate. Yeah. What about that? I kind of like that.
I would rather punish them incrementally and just let the demand for their horrible product dry up over time.
Yep.
And let that be reflected a little bit at a time in their stock price instead of one morning in their stock price. One morning in the stock price, all the banks are broke. Feels a lot like 2008.
There are a lot of downstream effects.
So, I mean, pretty crazy, really radical, in my opinion, just the way that, he's saying it. But again, I think people are waking up to the reality that, central banking is somewhat of a scam, in my opinion, right? I think the way that he's basically saying, which is like, stop paying. I mean, I don't agree with that. But anyways, I wanted to get your guys' thoughts.
Yeah, so I like Tucker's thoughts here. I think Tucker is more aware that the situation we're living under is not a fair monetary system. I think he's very aware of the fact that to actually operate under a fair system, we need a pretty radical change. Again, Tucker's argument there, it's an interesting one. Just everybody stop paying loans. on one day, and then you renegotiate and tell the bankers, hey, these are the new rules we want to operate under. I'm probably more of a sly roundabout way maximalist. I do prefer the Bitcoin approach and just completely opt in out of the system and just adopting a parallel system. Now, I think my thoughts on Dave Ramsey. He obviously doesn't understand Bitcoin. Everybody's seen the clips of him bashing on Bitcoin, hating on Bitcoin, telling people it's a scam. And more recently, it's really interesting, but people on his show are starting to pivot on Bitcoin. But I think Dave Ramsey's approach kind of ignores the fact that central banking helps prop up the stock prices of these banks. So again, Dave Ramsey's argument in a logical kind of way, it makes sense. Oh, it's a free market approach. Let's just stop supporting the bank's faulty product. And in a fair system, this would reflect in the bank's share prices decreasing, right? But what Dave misses is we don't operate under a fair system. They are using the money printer to artificially boost their share price. So everybody knows that the banks do not have a fair product. Nobody wants to use the bank's product. Everybody knows that you cannot retire by putting dollars in the bank and getting a 1% payment on your money in the bank that you're giving to the bank for your interest when the debasement rate is 10% per year. It's impossible to retire by putting money in the bank. Everybody's aware of the fact that they have a bad product, but again, the share prices of these banks will never reflect reality because they can borrow money for a lot cheaper than you can borrow money for. And what they're going to do is borrow billions and trillions of dollars, and they're going to prop up their own share price with stock buybacks. This is, again, to your point, Nico, with central banking, the world is not fair. Reality is not reflected in a world where the elite, the politicians, the bankers, and the central bankers, they are exempt from the same rules that we have to follow.
Yeah, 100%. I 100% agree with you. And then again, you know, we always hear about democracy and, you know, how, you know, the people have a say. You know, they don't have a say on who the chairman of the Fed is. They don't really have a say of who's leading the European Central Bank, right? Anyways, I do want to get Smitty. What are your thoughts on this, my friend?
Yeah, I think I agree with a lot of what Luke just said. I think the first thing that strikes me is the irony, I think, which you guys probably detect of somebody who is keen to what the inherent root cause of the problem is, interviewing a guy who is, from a legacy financial standpoint, has a lot of really great rock solid advice for a lot of people. But the problem is that it's all rooted in the legacy system, right? Or at least they've happened to live through a time where that legacy system hasn't really started to come to a head with this exponential, debt spending and the kinds of all the fiat problems that we're all aware of. The irony around that, I think, is just palpable, because if Bitcoin was sort of introduced into the conversation, I think it would be really interesting as a round two between these two, especially because I just saw in the show recently somebody on, it was somebody on Dave Ramsey's staff, if I'm not mistaken, was actually the tides are turning a little bit on his show. This is a first just in the last couple of weeks, as Luke mentioned, where they're actually recommending some amount of exposure to it. I think it's still fairly low, but I think they're starting to. And I think one other thing that Luke pointed out that I also think was interesting is that I think, Luke, you said a lot of people realize that they're working with a bad product here. I think the thing I would add to that is that, yes, but it's unfortunate, and unfortunately so. I think the masses of people in retail are the ones who, like they've always been getting screwed, are the ones who are not understanding it quite enough, in which I'd like to see people understand a lot more, is the people who are not in the wealthier class or the ultra wealthy class, or part of leadership in various institutions, who are definitely hip to the fact that this is a broken product. And I think, unfortunately, it's kind of a double-edged sword. Right now, we're moving into the sort of institutional phase of Bitcoin, which I think ultimately is a good thing for expanding and maybe turning this thing into a Bitcoin standard, so to speak, to use a worn-out term. But I think still the thing that's unfortunate to me is that the people who are watching this fundamentally are still not, the layperson out there, who people like me, they're not understanding quite enough the technical reasons why this is so broken, why that's so inherently why the cards are sort of stacked against them because of technological problems, but which is being taken advantage of fundamentally by the banking system. So.
Yeah, 100%. I think, but again, like I think the importance here is the Overton window is definitely shifting. I think people are starting to notice. I think people are starting to get frustrated. They're starting to say, "Hey, listen, we were promised something. The outcome is not what we were promised." They're starting to get frustrated. They're starting to ask questions. Imagine where we're going to be 10 years from now, right? And I think that's just a really important question that I think we have to ask, right? So anyways, guys, it's going to be a great show. We're going to hit the news segment. We're going to be talking about the strategic Bitcoin reserve bill passes in the great state of Texas. The governor is bullish on it. He actually posted about it yesterday. And Michigan proposes bold crypto legislation, Bitcoin pension, CBDC ban, and mining incentives. And then, of course, during the culture segment, we're going to be doing a deeper breakdown on Smitty's guide, essentially Smitty's Bitcoin retirement guide. So we will be right back in just a second. We're going to hit the news.
I want to give a shout out to our sponsor, Casa. Casa makes self-custody easy and secure. As a Bitcoiner, I care about holding my own private keys, but multi-sig can sometimes get tricky. Casa nails it with a multi-key security. So even if one key gets lost or stolen, your Bitcoin stays safe. And you don't give up custody, meaning no one could access your Bitcoin but you. No seed phrase anxiety, no single point of failure. I've been telling my friends and family about Casa for years. Their UX and UI on their app is by far the best in the industry. Inheritance planning is built in, and they even offer Casa for Business if you're thinking about a Bitcoin treasury. Hit up casa.io today and use promo code SIMPLY to get 10% off Casa Standard or Casa Premium. Head over to casa.io. I want to give a shout out to our partner, CoinKite. If you take your Bitcoin security seriously, you'll need the best Bitcoin hardware wallet on the market to take self-custody. That's where Cold Card comes in. The Cold Card Q is the most advanced Bitcoin signing device ever made. It's got a full keyboard, larger screen, and NFC support, making air-gap signing easier than ever. It's built for power users who want the ultimate security without sacrificing usability. And if you're looking for a battle-tested, uncompromising cold storage, the Cold Card MK4 is your go-to with PSPT signing, an industrial-grade secure element, and USB-C. It's the perfect blend of security and convenience. Both devices are, of course, 100% Bitcoin only, open source, and built by Bitcoiners for Bitcoiners. Secure your Bitcoin the right way with the Cold Card Q and the MK4. Head over to coldcard.com today and use promo code SIMPLY to get 5% off anything on the store.
All right, everybody, scan the QR code on your screen right now. It'll take you directly to coldcard.com where you can use promo code SIMPLY. You get 5% off anything on the store. This is the best Bitcoin hardware wallet on the market. And again, use promo code SIMPLY to get 5% off. So what is the breaking news today? Strategic Bitcoin reserve bill passes in Texas. This is the second state in the United States to pass a strategic Bitcoin reserve bill. To get specific, the House of Representatives in Texas passed SB 21 yesterday, which would create a strategic Bitcoin reserve for the state, mirroring the one created by President Trump's executive order. Why it matters: a third state could have a place to put Bitcoin, following New Hampshire and Arizona. Yes, but the House made an amendment to the bill, so it has to go to the conference before it passes. Lee Bratcher of the Texas Blockchain Council tells us that he expects it to move through conference easily. What we're watching, June 1st is the last day Texas could pass a concurrent resolution. However, according to Axios, reading of the legislative calendar, so there's not a ton of time. What they're saying, already home of crypto mining, this legislation session, Texas should become the crypto capital. And again, here is the governor basically confirming that, Bitcoin is essentially this new era for the state and for finance. So this is most definitely going to get signed into law. This is, again, the second state that essentially is signing into law that they have every intention of making a strategic Bitcoin reserve, following the state of New Hampshire. Arizona had the opportunity to be the first state, but actually the governor, Katie Hobbs, actually vetoed the bill, which I found interesting. She actually made it more difficult from a regulatory perspective. So yeah, I mean, bullish on, the great state of Texas. And moving on to Michigan. So Michigan proposes bold crypto legislation, Bitcoin pensions, CBDC ban, and mining incentives. It goes on to say, Michigan lawmakers introduced 4 crypto-related bills focusing on Bitcoin pensions, a state-level ban on CBDCs, and green mining incentives. House Bill 4510 allows public retirement funds to invest in Bitcoin via ETPs. House Bill 4511 seeks to block state support for U.S. central bank digital currencies. I don't know why a state would support a CBDC, but anyways, 2 additional bills would promote the use of abandoned oil wells for Bitcoin mining tied to environmental remediation efforts. So again, this is a trend that we're seeing all over the U.S., different states. It's one of the things that I love about the U.S. They have the states have individual sovereignty. They have their own House. They have their own Senate. And they have their own form of a president, which I would say is a governor. And they're all passing. You're seeing this across the line, whether it's a red state or a blue state. You're seeing pro-Bitcoin legislation being passed all over the United States. And this is very bullish for the federal government because essentially it puts pressure on them. And then it becomes a competition between the federal strategic Bitcoin reserve and the individual state strategic Bitcoin reserves. And I would say the more Bitcoin these states accumulate, the more sovereignty they'll have, right? So I think that's really bullish as well. So anyways, I want to get your guys' perspective, starting with you, Smitty, and then we'll move on to Luke.
Yeah, amazing trend of news here for sure. This is a second. I almost thought at this point it was the third state, but I saw sending out the Texas news the other day to all my friends and family who care about this, who appreciate why this is so important. There's the sovereignty aspect. I guess a couple of things come to mind for me. One is game theory. We're seeing the dominoes start to fall. There's detractors of this book, but there's the soft war theory. I think it's pretty cool. Within the U.S., you can start to see these dominoes fall within a single country, which is, I think, a bit of a microcosm in a way of what we're going to start to see play out on the global stage as well. It all comes down to a way to defend, I think. I would even go as far as they're saying their national security, their economy, trying to attract more people to come to their jurisdictions to be able to do business in a secure way, in a business-friendly way. I think this is extremely bullish. And I guess one other thing that came to mind for me is a question, because both of you gentlemen, I just found out, have been in Bitcoin for almost twice as long as I have, I think. And so one thing that comes to mind for me is like, did you imagine anything like this happening, for me, like 3 or 4 years ago, let alone 3 or 4 years ago, but 6, 7 years ago? Was this something that was a total pie in the sky fantasy, something a lofty hope? But I can only imagine, 2 cycles ago. So pretty amazing.
So for me, in 2020, I believed heavily and strongly in the models like the power law model, and I would have believed in the quantile model if that was around in 2020, because I saw validity in using the first 12 years of Bitcoin and extrapolating that forward, because nothing had changed. So in my eyes, I thought, okay, before 2020, we've only really had retail enter the Bitcoin space, and we're only living in an environment when more and more people are putting Bitcoin on the exchanges for sale. So in 2020, if you had told me, hey, in 5 years' time, President of America would be, saying he wants to be the crypto capital of the world. We have sovereign wealth funds all around the world, Norwegian sovereign wealth fund, South Korea's pension fund, Japan's pension fund talking about Bitcoin, all the Middle Eastern countries FOMOing into Bitcoin, billionaires putting Bitcoin on the balance sheet, 200 public companies putting Bitcoin on the balance sheet. If you had told me all of this would be happening in 2025, back in 2020, I would have said there's absolutely no way that would have happened. And if it was happening in 2025, the price of Bitcoin would be $5 to $10 million a coin, and all of these models will get broken to the upside. So again, I think this is the asymmetry. This is, I think, why buying Bitcoin today at $100,000 is an absolute bargain, because I think the fundamentals of Bitcoin are completely different to the price. But what do you, Nico? You've been in Bitcoin the longest out of all of us. I think I might have got in about 2018. When did you get in, and what do you think about how quickly things are changing these days?
Yeah, so I got in 2016. I think part of the coping mechanism that we used from the 2017 bull market to the 2018 was, oh no, it's going to be okay, guys, because the institutions are coming. The states are going to buy Bitcoin. Like that was like one of the copes that we used to like kind of justify that 80% drawdown. Well, they're here now. Just we were a little bit early. We were 7 or whatever years early, but they're here. The institutions are here. The states are here, and this is essentially everything that we imagine would happen due to the game theory. It's happening. It's happening in real time. It's playing out in real time. And obviously, it's fascinating to kind of see it. I think we all knew that it was coming, but the only thing that I would say that we didn't anticipate was that it happened a lot sooner than we all could have predicted, right? So I think that part is absolutely crazy and insane. But yeah, man, I mean, it's bullish overall. And I think that this trend is just going to continue. And you'll see once these states start benefiting from Bitcoin, and like all of us benefit from Bitcoin if you adopt Bitcoin and you put it on your balance sheet, you're going to start to see how essentially, every other state's going to follow suit because they're going to see it. Like, it's kind of like the strategy move. Like, it's kind of like when you hear about a friend who's been holding Bitcoin for a cycle or two, you're like, oh, I should probably get some because this is a pretty good idea, right? So yeah, I suspect these trends are going to continue. So just bullish overall. Guys, stay tuned. We're going to hit the culture segment in just a sec and talk to Smitty about his crazy guide, how much Bitcoin you need to retire depending on the income levels. We'll be back in just a second.
I want to give a shout out to our partner, HIVE Digital Technology. Why HIVE in 2025? Unstoppable growth. As the first ever public miner, HIVE's position to quadruple their global footprint, making them one of the world's fastest growing miners in 2025. And with elite operations that consistently top the industry in Bitcoin mined per exahash, HIVE's now headquartered in the USA. They're lean and mean, they're green and clean, and they're rewriting the playbook on sustainable Bitcoin mining. You can catch the latest buzz at HIVE Digital Tech or at hivedigitaltech.com. Need liquidity without having to sell your Bitcoin? For more than 6 years now, Ledin has been the trusted choice for Bitcoin-backed lending with transparency, security, and trust at their core. I absolutely love these guys, and I personally not only have an account with them, but also a loan. And some of the key features that I love about Ledin is the fact that there are no monthly payments. You pay at the end of the term. You also have the ability to roll over the loan as well, and you can pay it back whenever you want. Essentially what they do is that they help their clients unlock the liquidity of their BTC, allowing you to hodl while still accessing the wealth of your Bitcoin. They've been battle tested with their focus on transparency, security, and trust, allowing them to build a proven track record of client success and security, helping tens of thousands of clients harness the value of their digital assets with confidence and peace of mind. Learn more about what your BTC can do for you today. Simply Bitcoin viewers get 0.25% off their first loan by using the link in the video/podcast description. What are you waiting for? Head over to ledin.io today.
All right, everybody, we are back. Luke, I believe this is your screen, is it not?
This is, and this is a very bullish screen to be looking at because this is the model that Smitty's put together. Smitty, do you want to walk us through what we're looking at here? I really love that on the bottom part of the screen, the guys can have a look at what age and at what year you need to retire. So we're looking at age 5, 15, 25, 35, 45, 55, 65, and 75. And I just love how your chart breaks it down by year, how much you need to retire. So walk us through what we're looking at here, Smitty.
Wonderful. Yeah, thanks for having it up here. Yeah, first of all, so the latest iteration of this, which kind of went decent amount viral as far as my perspective. I think one thing that added a lot of value this time around is that tabular view that I added below the chart, because I found over the time that you have two kinds of people: very visual, graphically sort of inclined people, You got a lot of people that they just want a chart. They just want a table, right? They want a lookup table. So, okay, what's the value when I have these two variables intersect? And so the two of these, first of all, they correspond one-to-one. So the numbers that are populating that table on the bottom are the same values that you would find if you found the intersection of the X and Y axis on the chart above. So what this is it's a tool that is, what it does is it solves for, given your current age today and this date in 2025, and has two inputs: that your current age and the future year. There's 5-year increments here, but you can kind of do your own interpolation here. Usually it's not, you can find the average between the two. Your future year that you plan to be able to retire, and then the output would be the values that are in each of those cells that kind of range from a darker gray or black color up to a bright orange color, depending on your age. That's the number of Bitcoin you need given that year and given the age that you currently are today. And then there's a bunch of there's a handful of assumptions that I can get into, but basically this is trying to answer the question. And I'm not this, by the way, one big caveat here. I'm not trying to recommend to anybody by any means that what you should do is you should save up enough Bitcoin and then actually start spending that down as a way to retire. This is trying to give a basis to answer the question of how much Bitcoin should I stack. And so for me, it's hard to think of a lot of other sort of objective reason or bases for why you would want to solve for what that number is, other than, okay, if I absolutely had to, starting from this age, I'd want at least enough to where if I spent this amount down every year until my age of death, then I would have enough to be able to do that comfortably. So it's not a recommendation. It's not a prescription. This is more of a description of where you'd be at based on that target. Yeah.
I love it. It is so bullish. Some of the numbers that really stick out to me is, again, I'm 28. I might look a little bit older when I've got the bloodshot eyes like I do today, as I'm trying to battle a little bit of jet lag, but I am only 28, believe it or not. But what I'm interested is, if I'm 25 years old, if I want to retire by 2035, I only need 2.41 Bitcoin. That's pretty bullish. And again, the further out, let's say I want to be more conservative and I want to retire by 2045. So in 20 years time, I could retire at the ripe, hopefully young age of 48 with only 1.07 Bitcoin today. That's very, very interesting and very optimistic in my eyes anyway.
100%. And actually, so you said you're 28, right?
Yes.
So you would be a little closer to the cell above it then, closer to 25. So you'd be still 20-year time. You'd need roughly just a little less than 1.2, but it's, 1.1-ish probably, right? Me, on the other hand, I'm 36. So I'm closest to that age 35 bucket. So if I was taking the same plan as you, looking at a 20-year, work for the next 20 years, I want to make sure I have enough to where if I needed to spend down, and by the way, this single view that you're showing here is for somebody who has roughly, in 2025 dollars, a total annual living expenses of $100,000 a year. So that may not apply to everybody, but I think it captures a decent amount of people. There's families, there's people who live in other countries that are more expensive, of course, but I think this is a good starting. If this is what your expected annual living costs are for the rest of your life, then this is a good map of how to do that. So.
Well, that's why I'm even more that's why I think this model is optimistic and bullish, because that's a great caveat you mentioned there, Smitty. This is assuming you want to spend $100,000 a year. Now, again, $100,000 a year here in Peru, you're living like a damn king for $100,000 a year, let me tell you. And most places in South America. Again, there's obviously some cities where it's a little bit different. Like I'm here in Madrid right now. Madrid's for housing, it's a lot more expensive here in Madrid. But again, I think $100,000 per year, like you're living upper class for, I think, the majority of the world, unless you're living in some of these big mega Western cities like, Miami, LA, London, Madrid, Sydney, Australia.
Yes.
I think you're living very well for $100K a year. That's why I think the model is very bullish and very optimistic.
I agree with you. And the other thing I'll mention is it's not, some of these things aren't immediately obvious unless you read my post that comes along with it. But that's $100,000 a year, again, in 2025 dollars. So what this model does is every subsequent year from the year of your retirement, it adjusts that up by an annual compounding rate of 7%. So that's even, just to go to your point, I think that's even more bullish, right? Is that this is accounting for the fact that to account for cost of living increase because of inflation, I'm using about 7%, which I think is actually pretty, I can get into why I think that's still pretty conservative. So every year you're increasing that by a compounding rate of 7%. So that starts to become a lot, 10 years, 15 years, 20 years down the line. And this is even accounting for that. And the idea is so that you can always assume that every year until the day you die, you're holding constant your quality of life is what that's trying to do.
Yeah, I love that. I mean, 100K a year, you're I don't know where that puts you in regards to, your quality of life, but I'm assuming that might put you in the top 10% of people globally, if not higher. 100K a year is, it's a very nice way to live. I know the median income over there in Australia is something like 40 to 50,000 US dollars. So again, the
100%, well above the median, right? And I think again in the US we tend to be pretty US centric sometimes, and I think there's a huge swath of the world that this, like you said, this would be like living like royalty essentially. So I'm with you.
And for the younger people as well, like if we jump on over to the chart, like if you're young and it's 2025, let's say you're like, 20, for example, like you can retire with some pretty low amounts of Bitcoin. Say you're 20 or even closer to that age 15 bucket, you're just entering the workforce. Like you can hypothetically retire with 0.7 Bitcoin by 2060, 0.84 Bitcoin by 2055. So that's in 30 years. And if you're like, 16, 17, just started work. I know a lot of people who are young, they don't have the biggest incomes. They're kind of like, I can't afford to get 4 or 5 or 6 Bitcoin to retire. But again, this model says, look, you can retire on 0.84 Bitcoin by 2055. 30 years in the future, you'd be retiring in your 40s, and you don't need a full coin to do that. So again, I think this paints a very bullish and optimistic future for people.
That's key. I think for a lot of people looking at what my hope was, a lot of these people could be using this for not only themselves, but thinking about their family, their kids, maybe even their grandkids, because they want to plan out, and I'm certainly doing this myself, is how much do I need to just sock away and gift to my kids, and maybe, what my kids would need. And it's a very optimistic view, right? It's like you can save a fraction of a Bitcoin and hand that over to your toddler. And I mean, why would you ever, maybe you have other sort of educational retirement funds, you've got 529 plans, you've got this and that, but to put this away and forget about it is, I think, incredible peace of mind for a lot of people who are worried about the upcoming generations.
So absolutely. I mean, I love how you break it down. You break it down from 5 years old to 100 years old. So like
there was a comment.
There was a lady in France that lived to 120. So you gotta change that model, bro. Cause people live longer these days.
That's very fair. There were things that I had to make a decision to sort of leave off the map here, so to speak, because I just can't include everything. But I would definitely be happy to form an update here. I know people are going to start living longer. I think for 99.9% of people, if you're starting to get to age 100 and above, I mean, let's be honest. I think, I'm not speaking for those outliers. I think quality of life is probably not super. That could change given technology. So that's a good point. That might be something I take a closer look at a future edition. But one funny comment to the age 5 and up is somebody made a comment about, I like how you included down to age 5 for a retirement plan, right? And my response
it's true, bro.
Well, I had to make, I'm including retirement plan. Oh, there's no better retirement plan than from diapers to diapers.
No, it's true. Because look, as a parent, I just had my first daughter, right? Like I'm like she's getting a portion of my stack, or I hope she does. Actually, I don't own any Bitcoin, but if I did own Bitcoin, I would want to give it to her. And this kind of helps me kind of plan it out for her. Right. So I think that's very important. Smitty, huge fan of your work, bro. Keep doing what you're doing. You guys are crushing it. Shout out to Cena and Plan C. Amazing content. Guys, we are reaching the top of the hour. Before we wrap up, I do want to give a shout out to Simply Bitcoin's conference sponsor, Bitcoin 2025. It's next week, May 27th through the 29th, 2025 in Las Vegas, Nevada at the Venetian Hotel. This includes Vice President JD Vance, Ross Ulbricht, David Bailey, Michael Saylor, David Sachs, the White House crypto AI czar, Jack Marler, Senator Cynthia Lummis, the Trump sons, right? So use promo code SIMPLY to get 10% off anything on the Bitcoin 2025. You can get a VIP ticket. I think the whale passes are sold out. Industry pass, the GA pass. You guys definitely want to go to Bitcoin 2025 in Las Vegas, Nevada. I'm your host for today, Nico. This is my co-host, guys, literally the best Bitcoin YouTuber in the game, Luke Mikic, which we're super, super happy to have part of the Simply Bitcoin team. And our special guest for today, we got Smitty in the house. Go give him a follow on X. Guys, have an amazing weekend. We will see you live from Las Vegas next week. Take care, everybody.
Today's episode was brought to you by BitcoinWell.com, a Bitcoin-only platform on a mission to enable financial independence.